My name is Jason Derbyshire. I'm the Business Development Manager here with TradeLog Software, and I'm going to be presenting today our webinar, and we're going to be discussing version 12 of TradeLog, what you need to know about using TradeLog, as well as some things about the 2012 tax year. Now again, we have 1 hour to cover a lot of information, so I'm going to try to keep the pace going. Now the webinar today is being recorded. Everyone wonders about that, so I'm going to make sure you know right away we are recording this session, and we plan to have it posted online within 24 hours. It does take a little time to get the video processed and posted. As soon as we post it online, everyone who registered for this webinar will receive an email that has the URL that you can go to view the video. So if you have to leave early, you will get that email sent to your inbox as soon as the video is posted online. So we understand if you have to take off or for some reason you get disconnected or have a technical problem. Most of what we talk about in today's session is going to pertain to those who are using cash basis accounting. So you're filing Form 8949 Schedule D. We really don't have the time today to talk about mark-to-market or Section 1256 contracts. I know there are a few questions that were submitted in advance about those topics. We just won't have much time except for maybe at the end we can discuss a few things. We will have further webinars coming up in the coming weeks to talk about some of these other subjects as well as more information about some of the things we talk about today. So we encourage you to stay tuned. One thing I want to highlight before we get going in our material today, many people ask, well, what do I need to do to use TradeLog? And some of the questions we even have submitted. It's very, very important that you follow the steps that we outline in our Quick Start Guide. And this is available in several different locations. Now, in TradeLog, if you have the Quick Start menu turned on, you'll see it's at the bottom of the window in TradeLog. But also you can go to our Help menu and click on Getting Started Quickly. This will take you straight to the Quick Start Guide that's found in our user guide, which is in the software. Or you can even, if you're opening the user guide, you'll notice that's the very first link, Getting Started, please read this first. These 8 steps are the main steps involved in using TradeLog every year, no matter if this is your first time or if this is your 10th time using TradeLog to file your taxes. These steps are the steps you'll want to follow. One of the number one causes of technical support problems when people contact us is they didn't follow the instructions. And so these instructions are vital. Make sure that you've read them and you follow them as you're using TradeLog, and you'll have the best results. This is also available online. If you go to our website at tradelogsoftware.com, go to our support menu, click on Online User Guide on the right, and here's the user guide online as well. So you have that available for you. All right, so getting into our presentation now for today and the information we're going to discuss. Just a quick overview, we're going to break this into 6 different sections. First, we're going to talk about some major software changes that are affecting version 12 and users of TradeLog. We're going to talk about wash sale reporting. We're going to talk about short sale reporting. And then the big topics, 1099 reconciliation, Form 8949. And at the end, we'll talk about some tips with filing your taxes for 2012. Let's get started first and talk about TradeLog software changes. Version 12 may look and work quite differently than a version of TradeLog you used in the past. Now, some of these changes we've been rolling out over the past several months, starting with version 9.3. That way we were hoping that we could get some users accustomed to the new changes in TradeLog, make it a little bit easier for the transition. I want to talk about a couple of the major changes that will affect users of version 12 and might affect your use of TradeLog right now. The first is the multi-account support. Starting in version 9.3 of TradeLog, we introduced the ability to support multiple account data files. In the past, you had to have a separate TradeLog data file for each broker account that you maintained. Now TradeLog allows you to manage all of your trade history in one file for all types of accounts. We support cash basis, which is filed in Schedule D, mark-to-market for those who've elected Section 475, and also IRA accounts. I'll show you real quickly what this looks like in TradeLog. Here's a sample of a combined account that has combined file that has three separate accounts. Again, there's an investment account, there's a trading account here for Interactive Brokers, and a trading account for Ameritrade. Now in this particular example, if I right click on one of these accounts, you'll notice that this account is using mark-to-market accounting. I'm using the MTM version of TradeLog. Two of these accounts are actually mark-to-market. One of these accounts is cash basis. So this particular trader has their account set up in that way. So TradeLog is able to maintain all of this in one data file. So this makes it a lot easier to maintain your trade history. A few of the things we're going to talk about later, such as support for IRA wash sales, it helps us to see why it's important to have this multi-account structure. So we encourage you to use the multi-account format. Now, if you haven't yet become accustomed to this, you're not sure what we're talking about, maybe you've just opened TradeLog for the first time, you can get help by opening the user guide in TradeLog, and you can search the word multi-account. We'll go to the search, and I can type multi-account, and it's going to show a lot of different topics that affect this, but if you notice one topic, multi-account TradeLog files, this is the main topic that discusses how these files are set up, where there's also a link to instructions on converting if you maintain separate files last year. So that's available. You can also go to the website link we give here, which is the multi-account files link on our website directly. Another thing that you'll notice a big change in version 12 of TradeLog is the reports menu. There's different reports, there's tax reports, there's trade analysis reports. Sometimes in the past these were used in essence the same, but because of some of the rules we're going to talk about later, you're going to notice now that there's some distinct differences between some of the reports. Your reports menu will change depending on the type of account you have, the type of securities, and even the type of taxable entity you have. One important thing, if you maintain multiple accounts in one TradeLog file, you want to make sure and run your final tax reporting from the All Accounts tab. Let me show you what this looks like in TradeLog. Notice the reports menu. We have at the top a couple of tax analysis reports. One is the Reconcile 1099 report, the Wash Sale Detail report. Under that, there's sections that involve different types of filing. If you're filing individual taxes, or if you're filing entity taxes. You notice that the entity are all grayed out on this particular instance. That's because I haven't changed in my setup. If I go under page setup, I can opt to use an EIN number, which is what I would use if I was an entity, and I could put that number in. Now you'll notice when I go back to reports, it's changed. So I can actually generate the report specifically for filing as an entity. I'm going to change that right back to a Social Security number. Now, below that, you'll notice trade analysis. Now, here's a big difference I'll make a mention of. The gains and losses report listed under trade analysis is not a tax report. So when you run that gains and loss, now we actually just removed the wash sale adjustments from it completely, because the wash sale adjustments that we're showing on this report would be very different than actual wash sales reported on 8949 or one of the other tax reports. So think of this gain and loss report more as like a P&L report. It's really just showing you actual gains and losses that happened during that tax year. Now you want to run a taxable report. Again, we want to go to the All Accounts tab. That's the best place where we run the tax reporting. That way we're accounting for all of our accounts. You'll notice here Form 8949, gains and losses, which can be used for State Schedule D. These are the reports that are actually used for taxes and include wash sales. Now remember, this file I have right here also has some mark-to-market accounts, so I can also select the mark-to-market accounting for those as well. So that's just a little basic. We'll use those a little bit more as we go later in our discussion of some various aspects and specific reports. Again, if you need help, open the user guide, search for the report name that you're seeking for help on, or you can go directly to our user guide online, the section running reports, and choose the report that you have a question about. All right, so now we're going to talk a little bit about wash sale reporting and some of the adjustments that have been made in version 12 of TradeLog, which affect 2012 tax year. First of all, I'm going to talk about changes to holding period and how TradeLog adjusts for holding period. We've made a change in the method that we use for adjusting holding period for wash sales. To explain this, I'm going to first explain the IRS rule. It's really just one sentence in Publication 550. It says your holding period for the new stock or securities includes the holding period of the stock or security sold. This is found under the section for wash sales. So the purpose of this rule is to prevent turning a long-term loss into a short-term loss by having a wash sale. So that's why they made this rule. The holding period for the older sale now actually carries forward to the replacement shares, the new security that was bought. Let's show how this, or why we had to make this change. In the past, TradeLog made this adjustment basically by identifying long-term holdings, and if you had a wash sale, the respective trade after that triggered the wash sale would now be a long-term holding. But what we've noticed now is with broker 1099B reporting, brokers have adopted a little bit different method. So to help reconcile 1099B better, TradeLog has now adopted the same method. The thing is, the IRS really doesn't state specifically how to make these adjustments. They don't say to change dates. They don't say how you would account for the holding period. So that's why there's nothing wrong with what TradeLog did in the past, but this is more of just an adjustment to better harmonize with what brokers are reporting. So here's the change. When a wash sale occurs, TradeLog is now going to look at the number of days that the original trade was held, and it's going to include that period of time into the holding period of the replacement shares. And so when reported, the date may be changed if that holding period dictates. Let me show you an example so you can see what I'm talking about. Here in our example, on April 7th, 2010, we bought 400 shares of ABC for $2,000. Then on January 21st, we sold those shares for $1,300. This generated a loss of $700. 2 days later, on January 23rd, we acquired or bought 400 more shares of ABC. Since that purchase was within 30 days of the loss, that triggers a wash sale. But what happens when we apply the changes to dates for the holding period? Let's take a look. What happens now with this change in short sale reporting is that you notice the original trade was held for 654 days. Now, on January 23rd, when we bought the replacement shares, those 400 shares triggered a wash sale, and so the holding period on those 400 shares now includes the 654 days from the original trade. So when reported on Form 8949, the date acquired is going to be adjusted. It's going to be changed to April 9th, 2010 and reported as long-term. So let me show this in TradeLog so you can see what this looks like in an actual example. We're going to use the same situation, the same shares there, and we're going to go to this file. So notice here again, on April 7th, 2010, we have the original purchase. We sold it 2012. We repurchased it again on January 23rd, 2012, and we sold it in February. Notice what happens when I run the reporting for this. When I run the 8949, you would think that we would have a short-term trade. However, nothing shows on the short-term section. We go down to the long-term, and that's where both of our trades are. Notice the first trade that was bought in April 2010, sold in 2012. Now we have a subsequent transaction which has been adjusted. The holding period has been adjusted to April 9th, 2010, and that's being now categorized as a long-term trade. So this is an important change that we've made that can have a real drastic effect. You can see one of the big challenges to this is actually trying to reconcile things. If you're looking at your Form 8949, you might say, well, these trades don't look the same as they do in the actual trade history. They're probably going to look a lot more like what your broker reported, though, on the 1099. A couple things to help with this challenge. Number one, a TradeLog only changes the date acquired if the holding period exceeds 365 days. In essence, it becomes a long-term trade. That's when TradeLog will actually make that change. Another tip that I'll give you if you're in TradeLog is to actually use the gain and loss report listed under taxes. It also says this can be used for state Schedule D. If you run that gain and loss report, you'll notice it makes the wash sale adjustment. And the dates have been changed on the actual trades, but you notice it shows you the wash sale adjusted line 2, so there's line 2. The original date was actually January 23rd, 2012. So that might help you if you're trying to understand why the dates are different, or you're trying to understand the wash sales. Look at that gain and loss report under taxes. Another big change that we introduced in version 9.3 is for the ability to adjust for IRA wash sales. And some might ask, well, is that required? Yes, if you look at Publication 550, the IRS does require taxpayers to adjust for wash sales between taxable and non-taxable accounts. Now, the question some may have is, well, how would the IRS know? Because I don't report my IRA to them. Well, that's between you and the IRS. But it is a requirement, and more we were requested to support this. To our knowledge, no other software program supports adjustments between taxable and non-taxable accounts except for TradeLog. We introduced this in version 9.3. What's unique about IRA wash sales is that they're one way. In other words, a purchase in an IRA can disallow a loss in a taxable account, but not the other way around. So we're only looking for losses in the taxable account and a repurchase of the same security in the IRA. The other unique situation, a normal wash sale, you get to adjust your cost basis later on, but with a wash sale that occurs in an IRA, the loss is permanently disallowed. There's no adjustment made to the cost basis of the IRA trade. With TradeLog, you're able to adjust for these wash sales properly. There are a few things you need to take note of. First of all, you need to maintain the IRA account history in TradeLog. There's no way for TradeLog to know what your trades were in the IRA unless you actually import that trade history. Also, you have to run your tax reports from the All Accounts tab. Again, that's very important. When you run the wash sale detail report in TradeLog, it's going to show you any permanently disallowed losses due to the IRA wash sales. Something else to also note is that TradeLog only makes wash sale adjustments to the IRA if there are no available trades to adjust in the taxable account. Let me show you an example of this. If we open up a file here, a little sample that we have, an IRA wash sale. Here you notice in the trading account, one simple a buy and a sell, I closed this position at a loss. But within 30 days in my IRA account, you notice I repurchased the shares. When I go to the All Accounts tab, first I'm going to run the wash sale detail report. You notice it lists a summary of wash sales that were permanently lost to IRA accounts. So there is that wash sale, that $100 loss that was washed to the IRA, and it's not going to be recouped. Now, when I run my 8949, notice what this looks like on my tax reporting to the IRS. I have my trade in my taxable account that's been reported. There's a wash sale adjustment. The result is a zero gain or loss. That adjustment is gone because I don't report my IRA trades to the IRS, and the IRS says you don't adjust the basis of the IRA. So in essence, I lost that $100 completely. Now notice just a slight difference in this situation. I'll open another sample file here. In this case, I also bought the shares again in my trading account. So TradeLog has two options to trigger a wash sale. There's a trade, a repurchase that happened in my taxable account. There's a repurchase in my IRA account. So you notice now when I go to the All Accounts tab and run my wash sale detail report, you'll notice that TradeLog has adjusted the position that's in my taxable account. So now this is a deferred loss because I haven't closed the position. I will recoup it later. So if you do have trades in an IRA and you're adjusting for wash sales between an IRA and a taxable account, TradeLog is going to look for any opportunity it can to keep those losses in your taxable account. But if it's necessary to make an adjustment to an IRA, we do have the capability to do that, so you have the most accurate wash sale reporting. I just skimmed over that real quickly. Wash sales in an IRA is a whole nother topic. We have a lot of information online if you go to our trader tax topics under wash sales. And we also have an archived webinar that we did back in the fall about IRA wash sales, so you may want to check that out if you do maintain an IRA account. Let's talk a little bit about short sale reporting, because that's another thing that's changed in version 12. Some adjustments to how TradeLog is making the short sale reporting, and this particularly affects the date reporting for short sales. When reporting short sales to the IRS, the dates you report are not the same as the trade dates. I'll give a basic example. You open a short sale on February 1st, you close it on February 14th. Now you might think that the date acquired is February 1st, the date sold is February 14th, or something like that, but not so. The instructions for Form 8949 say that the date you acquired the stock or property delivered to the broker or lender to close the short sale, that's the date acquired. So this is the trade date of the closed short position. February 14th is when you actually acquired the stock, which would then be delivered to close the short sale. So we use that closed short trade date for the date acquired on Form 8949. What about the date sold? Well, again, the 8949 instructions say that the date sold is the date you delivered the stock or property to the broker to close the short sale. So delivery occurs when that position is actually settled, when the closed short is settled. Therefore, in this case, we closed the position on February 14th. It would have settled on February 17th, and so the date sold would be reported as February 17th. However, there is an exception to this, and that is the application of the constructive sale rule. If the short sale results in a gain, the constructive sale rule says that delivery is then considered to have occurred on the trade date of the closed short position. So in essence, that changes in our little example. Rather than reporting it closed or sold on February 17th, it would be February 14th. Let me show you how this looks in TradeLog. It might make a little more sense to you. I'm going to go to this example. Here I have my first position is ABC. I sold it at a loss on February 14th is when I opened the short on the 1st. I closed the short on February 14th. And then I have another position, XYZ. This one, same dates, but it closed at a gain. Notice what happens when I run the Form 8949. The dates for the position that closed at a loss, my date acquired is February 14th. My date sold is the settlement, February 17th. For the position that closed at a gain, the constructive sale rule applies, and so it was both acquired and sold on February 14th. Now, this doesn't make a whole lot of difference most of the time through the year. It's just a matter of dates. But where it does make a difference is if you have short sales that close in the last few days of the tax year. Notice an example. If we take the same example, but we change and both of our positions close on December 28th, 2012. Again, one is at a loss, one is at a gain. Once we apply settlement date for the trade that closed at a loss, you'll notice that it no longer appears on Form 8949 because it technically settled in 2013, so it's going to be reported on your 2013 taxes. However, XYZ, since it closed at a gain, is going to be reported still in 2012. So that's where you're going to see the difference is at the end of the year when those short sales that were reported in those last few days, some might be reported in 2013, some may be reported in 2012. All of this has to do with the way the IRS wants those reported and the application of the constructive sale rule. Now, just a side note with this, there's insufficient guidance on how option contracts are reported as short sales. And so TradeLog does not apply these date rules at this time to option trades, only to securities that are reported on to 1099, which is pretty much your stocks, as well as some of your ETFs and other positions. Down the road, hopefully we'll get some clarification from the IRS on how they want options handled for that. Now here's where we come to some different rules that it's important to note. Brokers report all short sales as closed on the settlement date of the closed position. They are not required to apply the constructive sale rule when reporting on 1099. Taxpayers, however, are required to apply the constructive sale rule. And so that gives us two different sets of rules that's going to cause big differences sometimes in what's reported to the IRS. The 1099 may or may not report some short trades that are on the 8949 or are not. We're going to discuss that a little bit more later when we talk about reconciliation differences. But if you trade short sales and you had any short sales that closed in the last few days of the year, then this may affect your reporting. Just a little tip, if you want to avoid that mess, don't close any short sales in the last 3 business days of the tax year. Then you won't have these problems. But this is the rules, this is what happens. So let's talk now about this difficult part, 1099 reconciliation. This is a real challenge these last couple of years since the brokers started having to report cost basis. We've seen changes in the way 1099 is reported. And sometimes the most basic thing, which is reconciling gross proceeds, has now become very difficult. Some of you have had great success. You're able to reconcile your proceeds within a few pennies. Others have major differences. So we're going to talk about some of the things involved in reconciling 1099. First of all, most important is understanding your 1099-B and understanding the numbers that you enter into TradeLog. So let me show you here real quick in TradeLog. If I go to Reports and go to Reconcile 1099-B, here's the information that TradeLog is asking you to enter regarding your 1099. Keep in mind that we have no way to get this information from your broker automatically. Brokers do not put the 1099-B in a downloadable format. It's not available, even though you might think it is. That can be misleading. They do not provide 1099s in a format that we can simply download. So we don't know all this information. Plus, brokers tend to be different. What one broker may report as a covered security, another broker does not. So we're seeing those discrepancies. So notice, first of all, we ask for total gross proceeds. So this is the total of all the sales or proceeds that your broker reported on the 1099-B. Second section here is for cost basis. Now here is where a lot of people get confused. What we're asking for is cost basis that is reported to the IRS. Now keep in mind, your broker has different sections on the 1099. I'll show you a few examples in a moment. Just because they put a cost basis number on the 1099 does not mean it was reported to the IRS. Confusing? I know, but I'll show you where you can better identify that. TradeLog only needs the short-term cost basis reported and the long-term cost basis reported. Usually your broker will indicate that this is for Form 8949, Part 1, Box A, and Part 2, Box A. I'll show you some examples here in a moment. There's a few other options you have over here. For the most part, the default settings work for most of the brokers. The one you might want to look at is if you did have options that were exercised and assigned, whether or not your broker adjusts the sales for option premiums. So this is the information we need. Now how to get that? That's the challenge. Well, let me show you a couple of broker 1099s as examples. Here, first of all, we have a 1099 from TradeStation. What I like about this 1099 is they really make things fairly easy to find and pretty clear. On the first page, you notice there's a section Gross Proceeds. There is that number that we need to enter for gross proceeds, $203,570 or $276. That's easy. The broker gave us that total. That's what we enter into TradeLog for gross proceeds. Some brokers aren't that easy, as I'll show you in a minute. What I also like is they give a nice synopsis here on page 2 of the sections of their 1099. Notice here is our categories. We have category A, basis reported to the IRS. For cost basis, that is what we're looking for. We're looking for cost basis that was reported to the IRS. Now you'll notice that second category, category B, they say basis not reported to the IRS. Now there's a basis number here, but keep in mind this is just for your information. That was not reported to the IRS. It was a non-covered security. So the only number you need to enter into TradeLog from this 1099 is the gross proceeds, which is here, and also the cost basis for the reported securities. That can get really confusing, especially when you have a broker that isn't quite as easy to read. Consider this example. I'll open up from E-Trade. E-Trade does a really good job on a lot of their reporting on the 1099, but sometimes finding your totals can be difficult. Here you notice they don't give the nice summary at the beginning that TradeStation did. Instead, they have different sections. So notice I've highlighted this first section is non-covered, box 6A, and it gives a little synopsis. It says report on Form 8949 in either Part 1 or Part 2 as appropriate with box B checked. So this is non-reported cost basis. It's going on box B. However, it is part of what we need for sales. So there's one of the sales numbers that we're going to need of $7,000. Next, they have another section on page 6 here. You notice here, this is for box A. This is short-term covered securities. And so we're going to go to the bottom of this section, and we're going to get our total for cost basis, what we'll need, and there's our total for sales. Now remember, we have to add this with the sales number that we saw in the earlier section. So there's two sales numbers we have to add together. In addition, on this 1099, I have long-term holdings that are reported as covered. So here's Part 2, Box A. So again, there's another sales number I have to account for, and then there's the cost basis number. So I've got to add up all of the total for column or for box 2A, all of the sales numbers, in order to get the number that I'm going to enter into TradeLog. And then I got to go back and get those two cost basis numbers, the one for short term and the one for long term. It can be a little bit more difficult when you have a 1099 that doesn't give you a nice, clear summary that some of them do, and that's an example that we see here with E-Trade. One thing I also highlighted, you notice here in box 2A, sales price less commission and option premiums. So that's the giveaway to us that this broker did adjust for option premiums, and so I would check that box when I run my 1099. That's kind of a quick synopsis. The key is you need to look at your 1099 and you need to understand exactly what's being reported, not being reported by your broker. It's the number one cause of reconciliation problems. People contact us, my reconciliation report has a big difference. It's usually because they didn't enter the correct totals. Now keep in mind the reconciliation report that TradeLog generates is not an IRS form. It's a tool to help you verify trade history. And that's important to remember because sometimes there's differences that you can get really hung up on that maybe aren't as big of a deal. We'll talk about some of those differences momentarily. The 1099 reconciliation report in TradeLog is only looking at sales. The cost basis number you entered, we're going to use later when you run Form 8949. But for the reconciliation, what we're doing is we're looking to see if the sales that TradeLog reports match up with the sales that your broker reports. A positive difference could mean TradeLog's reporting more sales. A negative difference means TradeLog's reporting less sales. So there may be differences. Many times you're able to get that to zero, and that's perfect. But keep in mind that with all the changes that have gone on with 1099, there are circumstances now where the reconciliation report will never balance to zero. 3 examples that I'll give. If your broker adjusted sale amounts for wash sales, such as on short sales, you're never going to get a balanced reconciliation report. If the broker reported sales that are not maintained in TradeLog, for example, if you have precious metal ETFs, there may be little sales that are reported as return of capital. Those aren't imported into TradeLog, so that's going to cause a difference. Also, remember we talked before about short sales that close at year end? Well, those differences between the rules for brokers and the rules for 8949 may mean that you're going to have differences in your reconciliation report and TradeLog. So it is possible that you will never get a zero balance when you run that reconciliation report. What to do if there are large differences? Well, first thing, go back and double check your numbers. Even if you think you had it right, it's not a bad idea to just go back, check the numbers that you got off the 1099, and make sure you entered those correctly. Also, review the known problems. I have a link here to our 1099B problems page. Let me open that up for you. This is located under Trader Taxes on our website. You go to 1099B reporting problems. Here we list some of the problems known. Some are general problems that affect all brokers. There's others that are specific to brokers. For example, some brokers are reporting the sale amount for a trade for wash sales, even though the IRS says to adjust the cost basis. Again, that's going to mess up your sales numbers, and your sales are never going to reconcile. So read these notes for your broker to make sure if there's anything that's affecting you. That may save you lots of time. We've got 4 or 5 brokers listed on here right now. This is continually growing, so we'll be keeping this up to date as we go through the tax season here. Also, open up your 1099. Look for anything that might be out of the ordinary. If you see something that's being reported on the 1099 that doesn't look right to you, it's your account, so you're probably more likely to notice that than someone else. Go through that. Look for anything that stands out. And also review the notes that we have on the reconciliation report, as well as any supporting documentation. You'll notice if I go to my report, I'm going to actually open a different file here. When I run the reconciliation report, notice that there are some notes that explain what's being accounted for in these adjustments and in this reconciliation. There's notes at the bottom of the page. Read those. Check your account history. It's important that you understand what's going on and try to see if you can identify the problem. Need help with the reconciliation? We want to remind you that TradeLog support is not accounting services. We provide technical support, so we're very limited in what we can do. We can't go line by line through your 1099 to account for every difference. We may be able to point you in the right direction, but in order to do that, if you do request help from us, you've gone through the things I just talked about, you need help, then make sure and send us your TradeLog data file and your 1099B. We need those 2 pieces in order to give any assistance if you're having reconciliation problems. Let's talk now for a few minutes about Form 8949 and understanding your taxpayer reporting. TradeLog is going to generate Form 8949, and we're going to do that based on your trade history. We don't import the 1099 from the broker because, again, brokers do not actually provide 1099 in a format that we can import. In addition, there's other problems with that we'll discuss in a moment. Now, understand what your 8949, how it's broken down. There's 2 parts to the form. You have short-term capital gains and losses, which is part 1. You have long-term, which is part 2. Within each of those parts, there can be 3 sections or boxes. Box A, B, and C. A is for reported cost basis on the 1099. B is if the cost basis was not reported, but the sale was reported. And C is for trades that just simply were not on the 1099B. For example, no broker reports options. So options go on box C of Form 8949 because that's not reported on the 1099. Let me go into my TradeLog file. Let's run an 8949 real quick and take a look at the example here. So here we have, this is part 1, short term. Notice A, B, and C. So TradeLog is going to generate the necessary pages for your report, and it's going to check box A, box B, or box C depending on your trade history. And that's what's going to be generated, which you'll use for your IRS reporting. Now, some things to note. TradeLog assigns your trade history to the proper category based on the general rules of the IRS. You can check those out on our website. under Form 8949 categories. There's general rules, we apply that. The problem is sometimes brokers report things differently, go figure. So you may need to review your 1099 to understand exactly what your broker reports and how that compares with TradeLog. If necessary, you can assign trades to a specific section on the Form 8949 in order to match up with the 1099B. You do that using the 8949 code. And there's a link that I gave there, so if you're going back and watching this session later, you can go to that link and you can actually see instructions for how to do this. I'll show a practical example in a moment. Now for cost basis adjustment, what TradeLog is going to use is the number that you entered earlier for cost basis that's reported on the 1099. TradeLog is going to use that to create an adjustment line. The purpose of the adjustment line is to reconcile the difference between what TradeLog is reporting for cost basis and what your broker reported on the 1099B. Now, a word of caution, a large adjustment could be an indication that there's something you need to correct. So don't just take it at face value. Again, it's very important that you actually understand what is being reported on 8949 and what's being reported on 1099. This isn't something that you can just print out a report, shoot it off to the IRS. Those days are gone for traders. It's become much more complicated and you're going to have to take time to understand your reporting. Let me show an example of how this can affect someone. Now in the sample file that we were in, we actually, when I went back and entered the 1099B information, you'll notice I entered my total gross proceeds, I entered the reported cost basis. What happened is when I run this, it balances for sales perfectly. So my sales are matching up. But when I run my 8949, you're going to notice that I have a sizable difference at the end of the 8949. Here on the last page of the section A, adjustment to reconcile, I have like a $3 million adjustment to cost basis. So don't just take that again and say, okay, well, that sounds good and send it off. If there's a large difference, why is there that difference? Let's go back to the 1099 and let's actually see what this broker reported. Now in this case, it's a Fidelity 1099, so let me open that up. And I'll show you right away, we notice a difference here. There's a section here for reported cost basis to the IRS. So that's where we got our number for cost basis, $764 or $63,000. But now there's another section, cost basis, that is not reported to the IRS. Now here's what I want you to note. When I run that 8949 and TradeLog, there is only one section that TradeLog generates. TradeLog, based on the general rules, sees all of these trades should be reported on Part A, which is our covered securities. If I go to the summary page for 8949, you can see that there's just one part that TradeLog's reporting, Part 1, Box A. But the broker broke this up separately. Why? Well, basically, the broker decided that some of these securities they did not feel were covered securities, so they did not report the cost basis for some trades, even though they did actually occur within the covered security period. And so this is going to require a little bit of adjustment in TradeLog. I'll give you an example. Let's take these first trades for CPNO. There were 3 trades that they're reporting as non-covered. One was bought February 13th, another March 2nd, another March 15th. So if I go over into my TradeLog file, what I can do is go to the Find menu and choose Ticker, and I'll put in that same ticker symbol, CPNO. And what I can do is choose those 3 purchases that the broker says are not covered securities. I'll hold down the Control key, I'll select those 3. And then I can right-click, change 8949 code, and I can change those to section B. Notice now in the far right column, 8949 code, those have been assigned to section B. Notice what happens when I run my 8949 now. I'm going to go to the summary page, and you'll notice now I have box B. So we've assigned some of the trades. Now this is only a few. There's other trades that need to be assigned as well. So I would need to actually go in and make that adjustment. That way, my 8949 categorizes the trades the same way the broker does. So sometimes this is necessary in order to get a proper reconciliation. In this case, I know with this account, if I make those adjustments, I actually have zero adjustment line for cost basis because everything matches up perfectly with the broker. But it may be necessary to do that. And again, we have instructions online if that's the case. Keep in mind also the cost basis adjustment line that TradeLog generates is optional. When I run that report for Form 8949, you'll notice there's a checkbox. I can choose to include the adjustment for the 1099 difference, or I can turn that off. So that is completely optional if I want to include it. If you do report a large cost basis adjustment, you should have at least a general idea of why you have that difference on your 1099. Think about this. If the IRS was to call you up and say, hey, we see you have this adjustment line, what is that for? If you say, I have no idea, you can take a guess what the next step is going to be. You need to at least have an idea what that's coming from. It may be that you have a large adjustment, but understand why. In fact, you can even provide information to the IRS, such as in a footnote with your tax return, explaining why you have the adjustment. And we strongly encourage traders to do that because the IRS needs to see there are some problems. What are some of the causes of cost basis differences? Well, you notice the big one that I made bigger, wash sales. That is the biggest problem that causes differences between 1099 and 8949. Why? Because brokers have different sets of rules for wash sale reporting. For example, brokers do not have to adjust wash sales between multiple accounts. They don't have to adjust wash sales that occur because of IRA trades. They don't have to adjust for wash sales between stocks and options. For that matter, they don't even have to report option trades yet. So those factors can completely change wash sale reporting and can have a big effect on cost basis. Notice, for example, a simple example I have. Let me open this up. Say that I have a trade in my Schwab account. This is real simple. I opened shares of Apple in May. I sold them a few days later in 2 trades the same date. My broker is going to report the cost basis as $55,500, which is rightly so. They're not going to make any wash sale adjustment because I didn't have any wash sales. I didn't repurchase shares after that. But say I have another account, and this account's an E-Trade. Here, in that same month of May, I purchased shares of Apple and I sold shares of Apple. Again, E-Trade's going to report cost basis of $13,341. They're not going to adjust for any wash sales because based on this information, there is none. But notice what happens when I report this according to the IRS rules for Form 8949 for taxpayers. Now I have wash sale adjustments that are occurring. $201 worth of wash sale adjustments that neither broker reported. These affect cost basis because when a wash sale occurs, it does affect and adjust the cost basis for trades. So that's going to mean my cost basis is going to be $201 more than my brokers reported to the IRS. Thus, you see TradeLog actually entered an adjustment to reconcile that difference. We're having to subtract $201 in order to get a total cost basis that matches what the brokers are reporting. Why do we do this? We do this because there's concern that the IRS is going to look at this number, see that your broker reported something different, and flag you for an audit. So this way, you're still reporting the same taxable gain and loss, but we're showing the IRS there's a difference here. There's a $201 difference between 1099 and what is reported on 8949. Now, whether you choose to provide additional information to the IRS, you can do so. But that's just one basic example of how differing wash sale rules can have big effects on reconciliation. Those were just a couple of trades. Imagine that on the scale of hundreds and thousands of trades. You can take a guess at how that's going to affect the reconciliation between 1099 and 8949. Besides that, as we've discussed already, some brokers are incorrectly adjusting sale proceeds for wash sales. That's going to affect cost basis numbers and cause a cost basis difference. Some short sales are not going to be reported the same in 8949 and the 1099 because of the rules we discussed earlier. That may cause differences in cost basis numbers. And besides that, there's the simple fact that many brokers are still struggling to report 1099B correctly. In fact, we've heard of brokers who have major problems issuing 1099s that they feel are accurate. They have missing cost basis information, or they simply can't do it at all. So all of these are reasons why there may be differences. As a trader, you need to understand your reporting. It requires more time and effort than in the past. If you don't like it, we're sorry, but complain to the IRS or tell your congressman, because they made the rules. And let's face it, the rules are very difficult now. And so we do provide some help. If you have cost basis differences, go online to our resources, our Trader Taxes. We have a wealth of information about 1099, about 8949, about all these differences in rules that can help you. You can read that and understand. We also encourage you to check out some of our expert partners, such as our friends over at Green Trader Tax, greencompany.com. They post a wealth of information. In fact, if you haven't yet gotten a copy of Bob Green's 2013 Trader Tax Guide, get that and check it out. Read it. But that way you understand the laws that affect your tax reporting. Let's talk about now in the last few minutes some tips for filing 2012 taxes because there's some things you might want to be aware of. First of all, there's a couple of things, some ifs. If you've not received a 1099B, and yes, we know that's the reality. Some of you, your broker has stated they cannot provide a 1099B on time this year. Or if your 1099B has major errors, or if there's major discrepancies, you're seeing big differences between TradeLog and the 1099, and it's going to take some time to work that out. Or maybe you just simply don't have the time to tackle this right now. We get customers, we get people who contact us and say, I need to do this today. Well, we're sorry, but with the complexity of this, it may take you more than a day. We recommend, if you're in these situations, to file an extension. Do that first. That way you get yourself more time, whether it be more time to get a corrected 1099, whether it be more time to work through these discrepancies, or just taking off some of the stress. That's something you seriously may want to consider doing, is filing an extension. If you plan to e-file using popular tax software, we know many of our customers like to try to file their taxes with TurboTax or TaxAct. You already realize that you can't use those software programs on their own. That's a whole nother topic of discussion. You're using TradeLog to get accurate 8949 reporting. Now the challenge is getting that into those software programs. Keep in mind, there are record limitations. Most of those programs have, if you're trying to import trade history. Some of them are 2,000 records, some of them 2,000 to 3,000 records that they limit. What we're finding, though, is that even within those limitations, you may have 1,000 records and they have a 2,000 record limit. You may still find that you have problems after you import that. The other thing is there are limitations for cost basis adjustment lines. When you export either a TXF file, which can be used for TurboTax or H&R Block, or if you export the CSV for TaxAct, if you have a cost basis adjustment line, you're going to get a notice, a warning that we do not include that in that file because those have to be manually entered. Those programs do not support importing that record. But here's another thing you need to note. The IRS no longer allows a negative cost basis entry when they e-file. So even if you were to manually enter that, if you have a negative adjustment, it's not going to work. It's not going to be able to e-file. Besides that, there's some other problems with importing, so we want to emphasize our recommended method. If you want to use one of these popular software programs to file your taxes, that's fine, but what we recommend you do is follow their alternate methods, which involve entering just the totals from your TradeLog 8949, and then you send your 8949 separately. You're still able to e-file, but you actually send the 8949 along with a form that they'll generate. It's Form 8453, which is basically an attachment, supplemental documentation. So check that method out. We have instructions. Go to our user guide. Again, click on Getting Started, Step 8, File Your Taxes. There we have instructions for TurboTax and TaxAct, and we include, especially with TaxAct, we partner closer with them. We've got some great information on how to file with them. It's so much easier than trying to pull your hair out and importing your trade history to just generate the 8949 by TradeLog, put the totals into TaxAct, for example, and e-file, and then just mail that 8949 into the IRS. They're getting the same information, it's just less work for you. So we strongly encourage you to check that out if that's your option. Now, if all of this is too difficult for you and you're saying, whoa, this is way too much, I can't do this, well, maybe consider having someone else do it for you. Check out online our TradeLogSoftware.com, go to our support center. There we have a link for services, and I'll actually pull this up to show you. Go to support, on the right side, TradeLog Accounting Services. Here we list our approved service providers, our partners over at Green Trader Tax. We also have our partners at TNT Accounting. Each have some different specialties, but definitely check out these experts because what they can do is actually do the work for you. And I've seen people who have agonized hours just because they can't figure this out. And well, that probably could have been done a lot quicker had they gotten professional help. It might be something to consider if this is just way too much for you. So we've got just 1 minute left in our hour. So just to kind of wrap up, a few things. You want to stay tuned. We're going to keep providing information about changes in TradeLog, about 2012 tax filing. We encourage you to follow our blog at blog.tradelogsoftware.com because we post up things frequently there that might educate you on some of these changes. And also check your email because we'll be sending important email notices as well as news about upcoming webinars. We are planning to have some special webinars with some of our expert partners to discuss some of these challenges more in depth and to discuss options that you have for filing your taxes. And this webinar is being recorded. We're going to post it online. Again, you'll receive an email notice with the link within 24 hours. Now, I do apologize. I received a message that some people were having problems with the audio through the presentation. So if you missed some of the audio, sorry if there was any problems with that. We will double check to make sure it's on the recording. So if you want to go back and watch some of that on the recording, you can do so. You also can pause the recording. So if you want to check some of the specific things or go back and listen to it again, you can. We want to thank you for attending our webinar. Again, we will have more upcoming sessions. That is our 1 hour. I can't believe we covered that in an hour. I'm going to stick around for a few minutes because I have a few other questions that have been submitted in advance that I can address. But if you have to leave us, that is our session. We will send you an email as soon as we've posted this live on our website. So a couple of questions we will address to talk about some of the other aspects of reporting. Give me just one moment. Let me pull up some of these questions. One thing we want to clarify, I had a couple of people ask about using TradeLog to generate a 1099. Now, just to be clear, your broker generates the 1099. TradeLog generates Form 8949. These are two different reports that, well, and ideally they would mesh up. They would actually match, but that's an ideal world because as you'll see on our website, we discuss in depth, there are different rules for 1099 reporting than there are for 8949 reporting. Which rules do you need to follow? Well, the IRS is going to hold you accountable for filing 8949 based on taxpayer rules, and that's going to require more work. That's where TradeLog comes into play. We generate an accurate 8949 based on trade history, based on the rules that the IRS has outlined. We don't rely on the 1099. As you saw in our presentation, the only thing that we do is we take some of the information that you enter from your 1099 in order to try to reconcile TradeLog and to help you see if there are any differences. So that's important to note because there may be differences between the 1099 and the 8949. TradeLog is going to generate the correct reporting. We're going to use that. Now, some might say, and I mentioned this a few times in our presentation, brokers do not provide the 1099 in a downloadable format. Now, this some have said, well, TurboTax allows me to import my 1099, but we have checked with several of the major brokers, and it may seem a little misleading. What they actually do is they take their realized gain and loss reporting and make that available to import into TurboTax and some of the other software programs. So you're not really importing your 1099, you're actually importing their gain and loss reporting. Oftentimes it matches up, but it may not. But keep in mind, again, as we mentioned earlier, there's different rules. So if you had stocks and options, for example, then your 1099 may not be accurate. If you had multiple brokerage accounts, the wash sales on your 1099 may not be accurate. If you had an IRA, may not be accurate. So these are cases where we encourage you to be educated. Check out our website. We talk about these topics in depth. In fact, I'm going to go back to our Trader Taxes page online. Here we have our updated tax topics here. We talk about filing your taxes. We talk about brokerage reporting, which is the 1099-B. We talk about some of the problems with that. We also talk about Schedule D reporting, Form 8949. And then we have a whole topic over here that's very popular, wash sales, understanding different aspects of wash sales. Check those topics out because that's information you need to understand. Let me go to some questions we had about ending the tax year and some of the processes such as that in TradeLog. So I'm going to go back to TradeLog here, and what I want to do is open up our user guide. Again, it's very important to follow the quick start guide. Getting started, please read this first. Here we walk you through the steps. What you need to do each year basically is make sure you have imported your trade history, verify your year-end open positions, reconcile your 1099 proceeds. Once everything's matched up, everything looks good, then you can go ahead and end the tax year. With the multiple account data files in TradeLog, this is easy because it's one step. You go to File, End Tax Year. It's going to ask if you've imported all the necessary information. You click yes, it creates your 2013 data file. Now you'll notice if I go and open my 2013 file it created, it has all of my account tabs set up. In this case, I didn't have any trades that carried over, so there's nothing to carry over, but I can just go ahead and keep importing. So you want to run the end tax year only after you're done editing and adjusting anything in 2012. Here's one important thing to note. If you run the end tax year, what it's going to do is create any carryover to the next tax year, in this case 2013. That includes wash sale deferrals, open positions, etc. So say I run the end tax year right now and I go back here and I go, oh, this is incorrect, and I start editing my trades. Stop and think for a moment. The edits I just made, if those affect my carryover to 2013, it's not going to be reflected in that 2013 file that was created. So that's why it's important that you complete all those adjustments. Basically, you are happy with 2012. Everything looks correct. Then you can run the end tax year function. And then what we also encourage you to do is after you've ended the tax year, you notice the next step on our user guide, if I can get back over there, is generating your 8949, filing your taxes. So you want to do that the same time that you end the tax year. That way the reporting that you send to the IRS matches up with what TradeLog used to make those carryover adjustments. Sometimes what we find is users, they run their 8949, then they don't end the tax year until next year. In that process, if there's anything that changed in your trade history or anything changed in TradeLog, there could be differences. So if you follow the instructions and you do all of that together, you won't have those problems. Wanted to point out another question that a couple people had submitted in advance, and we actually updated online on our trader tax topics. We have a topic on precious metal ETFs. If you traded gold, silver, or some of the other precious metal ETFs, what you might see on your 1099 are small sales that are recorded. They don't have a cost basis usually. It's just as a sale. And it may be listed as principal or return of capital. Brokers list it a little bit differently. So we get the question, well, what do I do with these? First of all, it is going to cause a difference with your 1099 and your reconciliation for sales. So that's where you might notice it. We explain this on our website. Go to the Trader Taxes, Precious Metal ETFs, and we explain more about tax treatment for these. We reference over to Green Trader Tax, to an article they have about how these are handled, and we give you also some links on some of the most popular ETFs, which actually provide details online how to make the necessary tax adjustments. So we encourage you to check that out if that affects you. One question I wanted to mention too, we have some who are with us who are using a trial version of TradeLog, or you're not yet a TradeLog user. A TradeLog version 12 is included for anyone who has an active subscription of TradeLog. In fact, if you have TradeLog and you haven't yet updated to version 12, you really need to do that, because this is the most up-to-date, accurate version of TradeLog. You always want to keep your TradeLog subscription up to date throughout the year, because we make any updates that it might affect broker imports, might affect tax reporting, anything else that we find. And lastly, before we leave, because we are over our 1 hour, but we just want to hit on again how to get support if you have a support request. Some have said, well, you know, what happened to the phone number? Why can't I call support? And this was a change we made back last summer. We request all technical support requests to be submitted. You can either submit that online using our form here, or you can also do it directly from the software. Go to the Help menu and choose Send Files to Support, and that will allow you to send your data file and the support problem you're having. We ask all users to submit support requests in this manner because it's the most effective way. We can either send a reply by email with the information you need, the help that you need. If necessary, you know, we can arrange if we do need to call you, but usually we can provide the help through email by pointing you to the instructions that we already have, and this way you can get you going, and you're not sitting on the phone holding for what would be probably hours during this time of the year. So that's how to get help if you need help with TradeLog. So I want to thank you again for attending our webinar today. We covered a lot of information. Again, if you have additional questions that weren't covered, we encourage you to check out the information referenced online, watch the webinar again, and we'll look forward to having you with us on a future webinar. Thanks again for attending, and have a great evening.